One of the biggest questions in crypto right now. Has crypto seen its bottom and is now a good time to buy? We're gonna take a look at the market and I'm gonna give you my opinion, see if we can come up with an answer. This is a very difficult question to answer, and honestly, it's a little daunting for someone this side of the camera because no matter what I say, someone over there is gonna disagree with me. However, I do wanna know your opinion, so if you do disagree with me, or you agree with me, leave it down in the comments. There's usually some good conversation going on down there, and you never know what you're gonna learn. And you never know what you're gonna learn. But anyway, I digress. We're gonna take a look at the charts and I'm gonna point out to a few of the things that I think are key levels that maybe we should take under our belt to analyze whether or not we're at the bottom and if it's a good time to buy. Now within that, there's also a couple of the theories I wanna talk about whether or not we're gonna potentially go up. Now I don't necessarily subscribe to those myself, but I will point them out because I'm trying to, again, be as unbiased as humanly possible, although I know I'm gonna find somebody to piss off on the other side of that camera. That said, obviously nothing here is financial advice, and really what I would do with this information is take it, put it in confluence with any other data that you're seeing out, any other YouTubers that you follow, and make a case for yourself that starts to align with all the pieces that you believe in. That's really gonna be the best situation for you. It's gonna be ultimately dictated by your risk profile and your portfolio. I can't tell you what that is, and you should do what's best for you. Something I really do want to talk about though is if you do think we're very close to the bottom, right? If that's the side of the fence that you do sit on, then you need to consider something while we're looking through these charts is how far down do you want to go? And how far to the bottom do you need to go in order to get the absolute most you're going to be happy with? Do you need to touch the bottom, or can you be just shy of the bottom to still see some sort of potential gain out the other side? Now I want you to think about that while we look at these charts a little bit, and we'll talk about it on the other side. Before I head on over the screens, I obviously want to talk about what is going on in the world today, because we need to wrap all this information in the macro scale of what's going on. So economically, we've got a war, we've got supply chain issues, and we still got lockdowns in China. All of those things obviously kind of related into some combination of things that are happening, but they have an effect on this. If you haven't noticed, Bitcoin hasn't decoupled from economy news. It still follows the trend of the stock market, and as we are seeing, that still holds very true. Today alone, we saw the Fed Chair Jerome Powell actually talking about raising interest rates, and he came out with some negative news, which was a little bit higher on those interest rates, an extra 25 basis points over what most people were probably thinking, although I don't really think it was much of a surprise. Really, the market reacted. It did react as it always will react. What I will point to is it didn't react terribly, which is a little bit interesting to say the least. That said, we could have a little bit of a delayed result, or perhaps maybe we are starting to see people just hitting the bottom of their fear level and saying, nope, I'm not gonna take it anymore. I don't wanna go any lower. But we do need to consider these macro effects as we go through and look at some of the smaller timeframes as we zoom in and look at where we are. All right, let's take a look at the charts, and we're gonna start out wide and zoom in as I had said before. And we're looking at the weekly chart. So if you don't know, each one of those candles means it's 1 week. And we're looking at this red line to begin with is the main thing I wanna talk about right now. This is the 200-week moving average. And this is one of the first cases that most people are gonna be talking about out on social to build a case for one of the reasons why we're probably at those bottoms and we're likely going to start to bounce up or go sideways. Because as you can see, every time we've hit it or passed through it, it has been very short-lived. Although I will say it did stay below it for a decent amount, and I'm counting the candles real quick, and is around 10 to 14, so that's almost, some time below it. So that could give you a little bit of a window to purchase in. And as you can see, we're currently below that line right now. So whether or not we're gonna stay below it or whether or not we're gonna trend sideways a little bit, it is something to think about. This is one of those key levels that a lot of YouTubers who do a lot more TA are really gonna point to. Now, I also wanted to look at the key resistance levels that we're at to really point to whether or not we're going to break through this pressure and if there's enough holding it back from going down further. Now, I have a couple of lines here marked. We see the green channel, we see the yellow channel, and then we see this dark blue one below. The dark blue one I want to point to is relatively important because it speaks to something about Bitcoin and where we've been. This is the all-time high of our previous bull rally, 2017, 2018, and as you can see, it touches, finds a second point of resistance here, and is a decent place, I imagine, of resistance because we haven't gone below all-time highs of previous bull rallies before. Now, if you subscribe to the Bitcoin halving cycle, then you believe that there's the bull run you're gonna see after the halving cycle. Each time we have one of those, we haven't retraced below that period. And that's something to be noted. A lot of people on social are talking about that as well. And I have a number of followers over on my TikTok who've used that as their excuse to say, hey, we're not going lower because we haven't gone below all-time lows before. So that is something that a lot of people are looking at. I would say, however, that But regardless, the resistance at that band is going to be decent, and it's going to have a lot of force in both directions. So if we hit it, we're going to have some pressure there to not want to go below. But if we do break it, all hell is going to break loose because we're in uncharted territory. And as we know with Bitcoin, once we start to go into that place, oh boy, fear can really set in. So now we're gonna zoom in on those channels that I kind of have pointed here, and I just wanna show the strength of this green channel previously. You can see with the multiple points and where it touches, that it actually had us going sideways. Again, we're at the daily chart, going sideways for a couple weeks, where this is the last point that everyone was kind of talking about, maybe another rally, and look what ultimately happened. This side of the hill is called the markdown period, and it's inevitable, and it's part of any cycle in any space. You can look at it in the stock market, you can see it here in crypto. The downside of the markdown cycle is generally marked by these little rallies of consolidation that usually fake out a lot of weak hands, so to speak. It really is something that catches people off guard because they think that's the point where we're going bullish. This is when real fear starts to sit in when you start to get to these lows, because we are seeing people say, hey, it's going to zero, and that's the case. I just wanted to point out that that was a heavy one that did cause a little bit of a channel. Now, if we look again, we can see there's a second point of resistance over on the left side of the screen, and that's where I've made this second channel, which is where we currently are. Looking at the daily, we can see we've actually started to break below it, so let's go a little closer. Now we're looking at the 4 hour, and you can see we've dipped below. We're starting to see more of these trends start to take action. Managed to slide right in, bounce back a little bit, and I'm still testing it on both sides, which is a little bit scary. Now, to really illustrate this point, I wanted to zoom into the 5 minutes so we can really see a lot of moves and we can see that exaggerated amount that we are below. You can see that our previous test below that went through and we caused back up some little bit of resistance and bounce back. This has now been tested again. We've come through and we're finding a closer low to that blue line. Now, if you remember that blue line, that touches the all-time high. So if we do dip below 20K, we're gonna be in some serious places. However, as I mentioned, I think this is gonna be a decent resistance point. Psychologically, 20K is gonna be a very big number for the entire space. And as you can see, we're still dancing around the bottom level of this channel. So what does all this TA actually mean? Well, it does mean that we've hit a very key level. And I would say that that key level is good enough for me to decide that if I was in a position to want to start DCAing, I would really entertain DCAing. I think a DCA, a dollar cost average, at this point, if you're waiting on the fence to do one, or if you're waiting to lump sum, it might be the way to just kind of start stepping into the market because it's gonna result in some of the best case scenarios. If we go down a little bit, you didn't put all of it in. If we manage to bounce back up, you could potentially lead back in with a bit more and put some more in, or you could keep that DCA up, and if we go sideways, you're just starting to put your wealth into it. So a DCA probably would be one of the best case scenarios for the vast majority of people out there. For those of you looking for that absolute bottom, as we talked about a little bit earlier, then hey, you've got to be looking at this point, and you might have to start really paying attention to the news and looking at these charts, because that's going to be what'll tell you whether or not we're going to breach this certain point. Like I mentioned, that 20K for the all-time high of the previous bull run is going to be a massive level of resistance and is something to keep an eye out. Now, while we're here, I also want to talk about the other theory going the opposite direction. Now, I don't necessarily subscribe to this. I think we're on our way to the bottom, if not close to that personally, but we should talk about it just to be relatively as unbiased as we can. What I've marked up here is probably the closest to a theory that I like that isn't just, hey, we're due for a relief, which is a lot of what some people are saying is, I believe there's a relief coming because look, the stock market, we all need a relief. Trust me, technically, the economy can get worse from here. And if you don't believe that, again, just go read the news. And something we need to keep in our mind is that macro scale that everything lives in. So I would really point to that having more weight than not. But the other theory that I came across that is something that has some compelling logic behind it is going to be what is called the Elliott wave theory. And it's something that a few people are talking about, not a lot, but a few. This is a theory within trading that kind of points to a specific shape that presents itself in a trading pattern, and it is marked by retail sentiment, and there are some Fibonacci numbers. It basically adheres to some mathematical laws within the universe that people are saying has a 5 sweep, specifically 5, believe it or not, where it does a 1, 2, 3, 4, 5, and will do a correction. And this can also be drawn in the opposite direction. Now, I don't know personally a bunch about the Elliott wave theory. I did only hear about it once I started seeing some people talk about it. Googling it and checking out Investopedia is a really good way to go about it. It's a very decent article that talks a bit more about how it actually comes up with it. But basically, look at this shape is the main point of what I wanted to show you. And if we look at that, it's an inverse. If that doesn't look the same, then I don't know what does. But I would also point to the fact that I've seen this shape many times in crypto, and it doesn't necessarily always mean down. I'm sure we could find these signals somewhere else. And this is also something that a number of traders out there point to, especially the comments and some of the videos being made about this, is that it's not really that strong of a technical analysis. It's one of those things that it's ambiguous as to how you read it, and there can be very misleading signals out there to point to an Elliott wave theory. So we may want to take it with a grain of salt. So outside of the Elliott wave theory, which could be a bounce up, and again, go read that article. It does have a bit more compelling argument than I'm making right here, but outside of that, I think either way, whether or not it's going to go down or whether it's going to go up, is really being governed by the macroeconomics of the entire situation. And I pointed to having to wrap this all in that conversation. And I do think it is something that a lot of people need to take into consideration. And when you see someone saying they're going bullish or it's going to go low, it's their general sentiment on the world economy as a whole. It really does paint that picture. If they think it's going down, they think things are going down, sort of thing. As we know, Bitcoin has not decoupled from the stock market. It's still in step with it every step of the way. So if you think this is going down, it's probably going wherever the stock market is going. I would keep that in mind when it comes to the entire situation. Now, while we're here, we also need to build a bit of a case for, hey, could it potentially go down lower? And in my eyes, I would probably point to probably one of the most logical things that says we could potentially go much further down from here. I would talk about the 85% rule. And it's not so much a rule as much of a guideline that we've seen over the previous bull runs. And I would point to the 2013 and 2017, obviously, as only being 2 bull runs that we really have this data. So you have to take it with a grain of salt, but it still is something that's kind of evident there none the same. What the 85% rule actually shows us is that after each bull run, we have seen a capitulation down to the lows, assuming you missed all those opportunities previously, of a roughly 85%. So we go down to this point using the 2017 rule, using the 2017 bull rally, and you can see I went down close to 85%. Now I can do a very similar move going back to the 2013 bull rally, and I can go down to this low point here, which is the absolute lowest point it went again. And again, it's about 85%, either side, give or take. So what does that mean? Let's take a look and actually see what it would look like if we did that very similar move to our current all-time high. If I take a mark from the point, again, I'm doing this kind of rough, guys, but take it all with a grain of salt. And I do that to 85%, that ends up being about 10,000 for Bitcoin. So that would show us that it's got a significant way to go. Every time I bring this up on social media, I get the response of, we haven't gone below all-time highs previously. So you can see we're in a little bit of a pickle. What do you make of both these situations? Now, again, I would have to try and take all that information, put it together so that we can try and come up with a decent answer that makes sense for us individually. Like I said, DCAing might be a very good option for you. I really do think that at the end of the day, if you want to lump sum in or you were thinking about DCAing anyway, DCA is probably the best way to start because it kind of covers your bases, helps you sleep at night if you get in, but also if you want to do that lump sum, it's just a way to put your foot in and wait for confirmation before you throw the rest in. Kind of hedge against your bets in case we do go down a little bit lower. Now I've seen calls for this 10,000, which I've kind of just shown you. I've also seen calls for 15. I haven't seen any logic behind it other than probably it's just a psychological number. You have to remember round numbers in people's heads always sit nicely. So 15, 10, and 20 is the one that I can find a really decent case for actually going to. Now the question you're probably asking is, well, what does this all mean? You didn't really answer the question. We could go up, we could go down, we could go sideways. And I would point back to my DCA alternative of, I don't really want to think about it. It's probably the best answer for most people. Even if you do want to put a lump sum in, DCAing now to just start dipping your foot in is probably a solid way to just at least say, hey, take some potential profit if it goes up, or potentially cut your losses early if it does fall down further. You can gauge yourself by getting a little bit in, sleep at night because you're in the water, but also waiting to see whatever the correction is going to be, because we are at a very key level. That key level is going to tell us sooner or later. And I know a lot of you don't want to wait for that key level, but patience is a virtue. For a lot of people I was talking to over on my TikTok about the steps that we're seeing on the markdown phase, I had so many people asking, when can I get in? When can I get in? Isn't it going up? And I just said patience. And I've been talking about that for weeks now. And the reality is this is where we are. It's still going down. While it is completely falling, you're at a higher risk of being wrong because the trend is going downwards than you are of catching that reversal. There are patterns we can look for reversals, especially if you look at TA, double bottoms, head and shoulders, or inverse head and shoulders, so to speak. But not everyone subscribes to those. And if you don't, I would try to imagine, okay, look at my entire world, look at gas prices, look at inflation, look at everything that's going on, and take that into the fact that it's going down as well. Everything's pointing down. Now, I don't mean to paint a bearish picture, and I know that probably showcases a little bit more of where I sit. And yes, I don't want to have everyone yelling at me because it flips around, goes off to the moon, and you told us it was going to go down further. So I go back to my general thought of, hey, maybe a DCA is a good way to go about it. Or perhaps cut that lump sum in half. Put half in now, and if you start to see it going to the moon, then catch in at 20, 30%. But you might want to just analyze it for a second while we're here, think about it, and potentially realize that the reality is that it will most likely go sideways a little bit for some period of time. Now, unless we have that Elliott wave theory, however, it could skyrocket to the moon, but that's not really one I point to, and it's up to you whether or not you want to believe that one wholeheartedly. Now, I know this kind of went back and forth both ways, but really at this point, anyone telling you more definitively what is going to happen is probably lying. And I have to say that in all seriousness. At the end of the day, there's so much information that you have to absorb in order to make this sort of judgment call that it really is difficult. And here's the thing, if that person gets it right, then tell me about them. I would love to know what they've got right and what more they're gonna get right, because that's fantastic. They have a crystal ball and I would love to have one. I wanna see where they can buy one. But for the rest of you who wanna take this all for the reality it is, we're in a down market, everything is sad, everyone is saying things sad. Hey, just take it easy, mellow out, really remember where we are, remember where we can go, and just think about it all as the big picture. You will make money if you get in now, if you wait a week. If you don't wait a week, there's a number of results that will end in you still doing well. And I guess that really is it at the end of the day, guys. That's all I wanted to bring to the table. I know as a smaller YouTuber, again, I do not usually do macro overview looks because probably some people are subscribing to bigger YouTube channels where they have the knowledge. And I just figured I'd put out my information out there, my opinion, and talk about it as level-headed as I can. That's generally what I try to do here. And hopefully there was some value in it for you. What I want to know though, is there an opinion that you have that was either contradictory, whether you agree with me? Do you think I missed something? Do you think there's a case we should look at that's really heavily important? I would love to know down below in the comments, because again, those conversations can be really useful and we can really learn from each other. Also, if you missed the comments and you're not really getting good traction there, I have a Discord if you want to talk about it one-on-one. We can go through it and talk about the information. You can paint a case for it. You can come yell at me, whatever floats your boat. I'm really available for it. Link down in the description. This is the point, however, if you enjoyed the entertainment for what it was, or you did get a little bit of information that you appreciate, like, subscribe, they do help the channel and I do appreciate it very much. I will also leave you with that final answer that this is not financial advice, guys. Remember that. It shouldn't be, it's just an opinion. See you guys in the next video.